All right, boys and girls, how we doing out there? Doc and Mav with you here, ready, set, live. Today's Thursday, the, 17th of October, 2019. Seeing a little
Something
bit
like
of
that.
positive, yeah, a little bit of positive market. We'll talk about markets here. What do you got going out there, Mav?
It's blockchain week in LA this week, or it's finishing up right now. So, been at a conference for the last couple days. Yeah, just good to see what people are talking about, what they're getting excited about. So, definitely want to see what you guys are also excited about as well.
So, Mav, let's settle this rumor right now. You weren't one of the guys in the suits on the stage out there, were you?
Ah, you got me. I was, I was. Oh, you. No, I'm not even gonna try. There was like some public demonstration going on, some protest, if you will. I don't know. It's there's a video somewhere on Twitter if you want to watch it, but nothing like a little bit of drama in the industry.
Yeah, it seems like drama every day in the industry. Where are you
Mhm.
guys coming in from today? How are we doing out there? We got South Africa. Let us know where you guys are coming in from. And we'll be with you here for about the next half hour or so. We'll be answering your questions. We're going to be talking about what we see in the market. And we will be, Mav has got something teed up for you guys today. What are you going to be talking about later on, Mav?
Uh, just kind of what's going on, and like where are we gonna go from here? Because obviously, as he's pointed out, a 1.1% move is not really that exciting anymore. So we wanna have a better understanding of what is fundamentally driving the market up or down in this moment.
How do you pronounce that username? El
I think you
Okay.
got it.
Yeah, I don't think he likes your thumbnail. I thought your thumbnail was funny, like the hand and everything. All right, so what do we got here? We got Mo from Cincinnati. We've got Gray from Australia, Toronto, Michigan, Australia again. Is this the bottom for BTC? We'll talk to that in a minute. We have Northern Ireland, Austria. Hello. France here. We have Zulu Crypto Surfer with Digitex on the move. I'll talk about Digitex in a minute. And Charlie is from Croissant Land. West Texas. We have California, the left coast. What about Tixel? I have no idea about Tixel. So, Mav, while you're getting your stuff ready out there, I'm going to throw this on the left-hand screen. I'm going to completely and totally block you out. Okay, so let's look at what's going on here. This is Bitcoin, and this is on Coinbase. Doesn't really matter what we have. This to me, this little pattern, this consolidation to me looks like this is a set of flashcards I did like 800 years ago, and it's a bear flag pattern. This is based on the work of Thomas Bulkowski, and he gave this an 88% success rate that we're going to see a break to the downside. Okay, those are not my numbers, but basically what we're looking at here is if this plays out like it more than likely should, we see range contraction, range expansion, range contraction, expansion again. This may be about a halfway house down to about 6,500 or so. Now, here's what I'd like to see. What I'd like to see is since everybody now knows about the bear flag, what I'd like to see is all the bears coming out of the woodwork trying to join this thing down to death and glory, down to 6,500. Okay, so when everybody sees the same thing, usually everybody gets pounded on, right? So this is what I'd like to see I'd like to see a little bit of a break to the downside, and then the bears load up and get absolutely crushed to the upside. This would be a trap play, is what we call. So again, this is definitely a bear flag. Everybody sees the neckline. We've had a little bit of a bounce from the neckline today so far. But as we've talked about, like everybody saw this symmetrical triangle, was expecting it to break to the upside. So we could see everybody being wrong on this thing. Now, I've done a little bit of statistical analysis lately with the folks in the Omnia room. And using the option chains, we've got basically a 68% probability of the range over the next week or so here. So this is to next Friday. So this is the probability curve of the price being within one standard deviation, plus minus one standard deviation, which is a 68% probability that we're going to see anywhere from 9,000 all the way down to 7,500 between now and next Friday. As long as the price stays within there, that is one standard deviation. We've also got, let's see which one it is here. Is it this one? Yeah, we've also got one that's all the way out to the end of the year. So it's a probability cone based on one standard deviation out to the end of the year, the end of December, and this is based on the option chain. So if you're looking for a little bit more statistical and accurate way of evaluating markets instead of, reading in Cointelegraph and looking for the latest projection, understanding how the options market works might be a better view for you. So let me guys know if you have any questions about that. Besides that, we have a couple of movers that are out there. Everything is just sort of marginally up, with the exception of, dare we say it, Digitex is schmoking today. So they've got a launch coming up. It looks like the Smart Deck team has put something together. I don't know. We've been through this for the last year and a half with Digitex, and it looks like, I do have more faith in their new partners. So I'd love to see these guys get off the ground and make something happen with this. So with that, Mav, I'm going to send it back to the both of us here and see if anybody has any questions and tee it up for whatever you got out there. This would be your cue to.
Yeah, I guess no one's got anything. All right. All right, let's see if we can get this going this time. All right. See that okay?
Looks phenomenal.
All right. Let's make sure this works and doesn't crash. If it crashes, I swear I'm just going to get rid of PowerPoint or reinstall it or something, because this is ridiculous. Okay, there we go. It's working. Okay. So let's talk more about the fundamental side of what's driving the market right now, and what I'm kind of seeing from just that perspective of things. So what's going on? It's always the question I want to ask every week. So let's run through some of the major news stories that have stuck out to me. For one, I know I talked a little bit about the ETF being denied and how it wasn't such a big deal. In fact, it was actually a good thing, because we're seeing the industry move towards trying to work with regulators and do things right. The SEC just put out for more comment. If you guys remember last year, they did that as well for another ETF application. So they're doing that again. And basically the takeaway here is that we're trending in the right direction as it relates to moving regulation, moving the different products available to the mass market forward. So that's good to see. It's good to see that we're trying to do things right on that side. The next thing is completely the opposite of that. Libra is doing everything wrong right now, it seems like. But at this point, we've seen about 25% of the original members of the Libra Association bail, jump ship, and it's you don't exactly want to it's that Schadenfreude or whatever, where you derive satisfaction from seeing the miseries of others. I don't want to exactly see Libra fail, but it's good that there's a unified front calling them out for their shenanigans, and their very clear intention to misuse people's data and just take over that sort of game. It's cool to see that is what's going on. Where I've also seen, at least I've been positive on, is the fact that people are not exactly conflating the corpo currencies, the Libras, with the cryptocurrencies, our space. They see the distinction between the two for the most part. So that's cool to see too. And it gets people talking about cryptocurrency more. So even as Libra and Zuckerberg are doing their thing and they're trying to push ahead, and
do you think that they're really trying to do they have nefarious purposes for this whole project?
So Libra itself is just meant to be a coin or whatever, and they've claimed that they're not going to utilize people's data from that, and it's going to be as close to as possible a cryptocurrency or whatever. But what they're really trying to do, their real objective here is to push forward Co-Libra, which is a suite of services, to be the facilitator for people doing loans and things like that. So they're really just trying to take this to the next level of being able to harvest that financial data, harvest the consumer data, and blend the two. That's where the power lies, and that's where you saw Tim Cook calling them out for an obvious power grab and things of that sort. And now there's a question of, should companies have this sort of power? So there's a lot of questions being raised just out of the Libra initiative right now. Yeah, I can't tell you quite for certain, what their true ulterior motives are, but to me, it's pretty clear that this is Facebook doing Facebook things, and we should not take them at their word. So, anyways, moving along.
They should get Jesse Eisenberg as a spokesman. I mean, he was really convincing in the social network.
Yeah. So another thing that seems to be a lot of over the news right now, and definitely coming out of DevCon, is DeFi. DeFi, we just passed the $550 million mark of ETH lockup. So there's 1.6 million ETH locked up in the DeFi ecosystem, primarily in the MakerDAO, the dApp, and the ecosystem surrounding that. So that's cool to see. There's definitely a lot, just kind of like Libra. There's a lot to prove. There's a lot that needs to be built out, and a lot of fears that need to be calmed before we see DeFi really take off more than just its little bubble. But that aside, we've seen it, even in the infancy of DeFi, it's really proving to be one of the best use cases of Ethereum, where we're seeing Ethereum actually move forward with adoption and just building things, and that's really cool to see. So DeFi is definitely something to watch, even if it scares some people, or regulators aren't exactly the keenest on it right now. We're getting there with it, and Ethereum is definitely proving that it is the ecosystem of DeFi right now. So that's another great thing for Ethereum. Capitalizing on that, another thing that we just learned was the clearing by the CFTC of Ethereum, or Ether, as a commodity. And what this helps to clear the path for, allow us to move forward on, is the eventual introduction of Ethereum Futures and other derivative products. And I know there's already going to be people typing away like, oh, well, Bitcoin Futures destroyed it or corrupted it, and things like that. Yes, in the short term, I would agree with that, actually. But in the long term, it's a necessary evil to find institutionalization, to get blockchain and cryptocurrency out to the world, and to do it through the proper channels. And yes, screaming manipulation from the rooftops, I'm right there with you. But at the same time, we can't have this space continue to exist in a vacuum. Something that I don't see really anybody talk about is when we talk about the proliferation of blockchain technology, when we talk about adoption. One thing that I want to remind people is that technology is not good or bad, and there's no filter there especially for an open source technology like blockchain. So where I actually think there's going to be one of the biggest adoptions, or where we see blockchain technology use, is in nefarious cases. For example, China using blockchain to better control their citizens and their spending and things of that sort. We don't want to talk about that because we want to live in this fairy tale land of like, oh yeah, blockchain is only for the benefit of mankind, and the building a more egalitarian economy and sticking it to the banks, and we are the good guys. But at the end of the day, we're dealing with a technology that is very powerful in its ability to either control or break free. So we have to remind ourselves of that. So to that end, I know I'm right there with you. Manipulation, whales, institutions, they're just going to come in and corrupt the space, and it's going to defile Satoshi's vision, and we'll never have it. Yes, there's an element of that, but at the same time, this is the path we need to go down as well. You can't have it both ways. So we can keep going on that, but regardless, this is good for Ethereum. This is good for the larger space to be accepted and fine financial products being built out of it. And it's the same thing as the ETF. So anyways, another thing, this is a slide reused from last week, but just to remind people that we're going to hear more and more about the halving or halvening or whatever it is leading up to the event. I think it's about 6 or 7 months away at this point. I think there's going to be some short-term volatility around it, but the real play here is the long-term effects it's going to have on the stock-to-flow ratio and the scarcity of the asset and just a lot of the things. So bear that in mind, and that's the perspective I want to reinforce. It's going to do good things for Bitcoin in terms of price and in terms of just getting people to talk about it. So that's cool. Another cool thing is that within, I think, the next 24 hours or so, we're going to see the 18 millionth Bitcoin mined. I really just wanted to put this in here just so I had it as footnote in history of like this happened, and it's cool because there's only ever going to be 3 million more mined between now and 2140, depending on the hash rate, power, whatever. But yeah, it's just so cool that we're already 10 years in and we've mined 85% of the total supply, and the next 100 years or so are going to be devoted for that last 14% or so. Just cool. It's cool to talk about it. It's cool to remind people like what the original Bitcoin was, and it's still running and still doing its thing. 18 million. I don't know when we're going to mine the 19 millionth one, but I'm sure it's going to be a while from now. So it's just cool to acknowledge that. So getting more to the actual fundamental reasons as to what's driving price right now or where things are going. I want to talk a little bit more about Bitcoin itself and use that as sort of a catalyst for the larger crypto market. But anyways, one thing to point out is we're in this period right now where we've sort of, despite the negative headlines that have come out recently, and despite some fear in the market, especially the last couple of weeks, we've held steady around the 8,000 mark, and I think the fear and greed are sort of stabilizing a little bit. And right now, the long-term outlook looks good for Bitcoin. We might still be on the precipice of some more volatility and things of that sort. But for right now, things are solidifying. So this was a slide from, I did a beginner blockchain day here in LA over the weekend. And so this is something I want to remind people of, when talking to beginners or people who've been in the space. At the end of the day, cryptocurrencies are more secure and efficient than traditional government-issued currencies. The reason I bring that up is because the emerging narrative right now for Bitcoin is to be a global hedge and safe haven asset and just a hedge against chaos and central bank race to the bottom. And so that's right now why we're seeing some matriculation in terms of price, in terms of interest in the space, in terms of just an emerging narrative surrounding Bitcoin. And so to sort of bring this into a more, quantifiable way of looking at it. Another way, not saying that past results predict future ones, but we can draw some correlations. One thing to look at is, on average, through the end of the year, through Q4, if you buy or where Bitcoin is in October and where it ends in January is generally trending upwards. Definitely was not the case last year. And, so I don't want to say that this is 100% guaranteed, but in line with the emerging narrative around Bitcoin, or in line with a lot of the other macro forces that we often talk about on the streams here, you just have to look at past results as well. Q4 is generally a time to be buying Bitcoin, an accumulation phase. Not always the case, but even if you had bought in November last year, that was still if you held that for 6 months, I think you would have done just fine. So what I try to impress upon you, what I'm trying to make you understand here is that even if we drop down to 6,200 or something like that, the larger trend is still in place. The longer play, the longer term perspective is the one you need to implicitly be playing by. So, just to reinforce that, pretty much you see on average, a rally for Bitcoin began on October 11th and end on January 5th the next year. Again, just on average, and we've only got 10 years of historical data for Bitcoin. So this is not some sort of Bible truth that surrounds this asset, but this chart here is just a basic summation or an average of the last 10 years Bitcoin and what it does based on the seasonality of it. So moving beyond just the past results and looking at the current state of things, another thing to look at is Bitcoin's relationship with gold. And specifically, we want to look at gold right now because, yes, in the recent times, the yields, the 10-year TIPS yield, it's sort of impacted gold just in the short term. Q3, unfortunately, for both Bitcoin and gold, were not good. They were some of the worst performing assets out there. While we saw a resurgence back into optimism for the larger markets, the trade war was put on pause. People, despite the fears that were prevalent in Q2, we saw people kind of come back and say, nah, it's okay. It's going to be all right in Q3. So when that happens, risk assets like gold and Bitcoin, they seem to get pushed to the wayside. And that's the perspective I want to impress upon you, is that even in the short term, the thing is, we're still seeing ETFs hit a new high for gold. So even though there might be some concerns about the price of these assets in the short term, the smart money, in my opinion, is in accumulation right now. They're looking to get into these assets and diversify out of risk assets like stocks that could, in the next years or whatever, pose a significant risk. So we also want to look at Bitcoin versus gold, and this is an emerging narrative that was really hot in Q2, and then everybody just stopped talking about it in Q3 because the correlation sort of broke down, and so identifying Bitcoin as digital gold seemed to stop. People stopped talking about it for a little bit there, but I think that's okay. It's going to take time for that, and Bitcoin isn't just digital gold. It's so much more than that. So to just base it on the comparison, the correlation between Bitcoin and gold's prices, I think it's well intentioned, but ultimately misguided for what gold is and what Bitcoin is. And that's something I think we're going to see over and over again over the next decades. But that's okay. That's the sort of time frame we're playing with when we talk about something as well established as gold versus something as nascent but emerging as Bitcoin. So all that summed up, what we're seeing right now is just a phase where we're hoping we're looking to markets as a point where things could, this quarter could be, it could go up, it could go sideways, it could go down. But ultimately, in terms of the long term, for crypto assets in the larger space, but especially Bitcoin, to see this as an accumulation phase, to see this as maybe not blood on the streets, but it's certainly a time that you look back on and say, like, well, that was maybe something to consider then. I don't see the market retesting lows in like the 3,000s, the 4,000s, or anything like that. There isn't anything fundamentally there to drive that sort of fear again, because what drove that last year was mostly based off of speculation and hype, and then the death of that, and just a general capitulation in terms of okay, this is never coming back. And I think that's, as we've seen over and over again, that is folly when you talk about crypto assets, because how many times has Bitcoin died in headlines at this point? I think it's over 400 or something like that. But this is a space, this is an asset class that has resilience. It has volatility, sure, but it comes back, and it comes back stronger. And so we're just in this phase where we're getting ready to get ready. But I think the smart money is looking at this as an opportunity more than just another October. So anyways, this is something we talk about a lot in our Omnia service. Just the broader perspective of things, what's driving the market, what are the fundamental reasons below the surface of what's pushing the market forward, what's driving the price, things of that sort. So we would love for you to join us. Head over to readysetcrypto.com/gold to get a good deal on it. And yeah, with that, we'll jump back into doing some Q&A. So hopefully you guys are not asleep at this point.
I'll tell you what I will do is I will steal the screen. You can take a look at some of the questions that have come up. Some of them
Sure.
are probably more in your wheelhouse. So I've got requests to go over Chainlink, Dogecoin, and Stellar. So I'll take a look here. I'm going to jump over to the chart. So I've got Doge on a weekly chart, and this is what I want you guys to do with your altcoins. If you're trying to figure out whether to jump in at the bottom of the altcoins or whatever, I would say, look guys, make it simple on yourself. So this whole notion of buy the dip works great, right? But you can lower your cost basis, but it can also still go much lower than this. I mean, 40 sats right now could go lower than that. We don't know. We don't know how the utility of this is going to play out going forward. So what I would want you guys to do is wait until any of these alts start making higher highs and higher lows. Wait for an uptrend to the upside for any of these. So, quite frankly, the only one that's really in an uptrend still is going to be Bitcoin. Now, Chainlink is done quite well lately. Let's see. Let's go to, no, we don't want USD. Let's go over to Chainlink versus BTC. And I've got this on a watch list, so let me cheat and do that. Okay, so this one, regardless of whether we look at this on a weekly chart or a daily chart, this one actually looks pretty good. And I like the fact that we've broken up here and we're consolidating in a nice bull flag. So let's put some structure on this one. And prices don't go forever to the upside. So the range expansion leads to range contraction. So we should see this consolidate and continue to consolidate. The only problem is that the weekly chart is also approaching exhaustion. So we may get one little break from here, but it may not necessarily go any higher than the all-time high. So in a way, we're sort of building what could be a cup with handle pattern. So this would be a cup, we get back up to the all-time highs, and then we flag out again. So the upside target for that would be the depth of the cup, if that is what this ends up playing. So again, I'm not predicting the future with this one, I'm just looking at patterns and how patterns typically play out. Let's see, the next one that we had was Stellar. So let's take a look at Stellar Lumens. I've got this one versus the USD. And again, I hate to say this, guys, but with coins that are doing like this, and I want to get Stellar versus BTC. So here's Stellar versus BTC, and this is by no means a weekly uptrend yet. This is just a weekly swing off the bottom yet, and still well below 1,000 Satoshis on this dude. So a lot of people are just looking at this and saying, my God, it's an uptrend. Look at this. The train has left the station. But this is why you need to use fractal timeframes. You need to understand what the larger time frame pattern is on this. Trust me, if you get the bottom on these, there's plenty more meat on the bone, right? Wait for this thing to start showing higher highs and higher lows. Okay, so that is the charts, and back to everybody else here.
Yeah, it seems like some of the top gainers, like Synthetics, Hollow, some the big ones that are doing well today, Doge, those are just the ones that are really good right now at like driving hype. Chainlink is another one, and Digitex too. Good at having like a resilient community just as much as the tech behind it. And some of the other things that I'm noticing is DeFi is also a great driver of interest and price action. And then just having a use case that they're well defined, they have good development behind. So yeah, it's fundamentals. Seems to be a lot of questions about China. As far as China or banks too, there's another question about couldn't banks just do a hostile takeover of Bitcoin? Yeah, maybe. But first off, they would need to develop the ASICs to be able to do that. And secondly, like, why would they do that? You sort of have this almost like, if you believe that Bitcoin is some sort of zero sum game where the whole point of it is to own all of the hash rate, well, you'll be surprised to find that you can just fork off and do your own thing without any cost. And all those ASICs that you developed for that specific coin are suddenly now made useless with a slight tweak of the consensus algorithm or whatever. So the real power behind not just Bitcoin but blockchain in general is that it is very adaptable, very able to just change and morph and do whatever it wants to counteract centralized control. Yes, I would argue that many of the top 10, if not all of them in the top 10, are centralized in some aspect. Bitcoin through its Chinese mining farms, things like that. But the thing to know is that decentralization, pure decentralization and distributed networks, that's a privilege, a really, really hard thing to achieve. So what we were really seeing is shades of decentralization, but true, pure decentralization is something that I can see the value of it, but in practice, in the reality of the world we live in, it's just, we're not there yet. What's going to define the decades to come is the hybrid, the synthesis of centralized and decentralized systems. And maybe people don't want to hear that, but it's combining the best aspects of both and looking for, like, where can we, what can we build with this? So anyways. All right, we'll be on here for a little bit more, but yeah, hopefully you guys enjoyed our presentation today. And if you guys have any deeper questions, let us know. But we run a private Discord channel attached to our Omnia service. So we're on there every day, and like, people are we don't allow shilling or anything like that on there. So it's a very pure experience. It's very centralized, if you will. But we're proud of it.
All right, let's see if there's any final questions here. Somebody was asking about Dash, and Dash, I brought up Dash on the chart, and it's like on a death spiral with just about everything else. So to me, again, guys, I don't get involved in the religious arguments about a project. I simply look at the price chart and see whether or not it's trending up or trending down. It's very simple to make investments like that. So I know that's not a popular opinion. Maybe some of you will get to the same point at some point down the road as well too. A lot of you have been brainwashed into thinking that you have to find a needle in a haystack. I would rather look for the haystacks that are going higher instead of ones that are going lower and then screech louder that yeah, it's almost, we see the same thing every week, is that there is this notion in cryptocurrency that he who yells loudest has the best project. So the price tells you everything you want to know about it. Yeah, so I would say, okay, so let's go over to the charts again. Let's do that. Okay.
The ultimate arbiter of truth.
The ultimate arbiter of truth. So we look at something like this. All right. So if you look at a weekly chart of Ripple, you can screech and scream all that you want to, but until this starts to make higher highs and higher lows, then this is the market saying what it thinks of your project. It's not me. It's not Mav. It's what the market thinks of the project. And so if you think that we're wrong, then the market's always right. That's the thing I've learned over time. Let's see, something else. Dash. Everybody wants to look at Dash. Okay, so let's look at Dash. Okay, that is not, let's see, Dash BTC. There we go. And this one's got a nasty spike. So you tell me, is this a positive chart or a negative chart? That's a weekly chart again. And, so you see something like this, and a lot of people say, my God, it's reversing off the bottom. Keep in mind, look at the weekly chart for a better understanding about where this chart is going. If it starts to reverse off the bottom, and if it gets above, say, like 25,000 sats, then you've got something to work with there. But for right now, no bueno, friends. Okay, so let's throw it back here. Any final questions? Got a couple of minutes left here, guys, and then we will get out of your hair.
Seems to be a lot of interest in a project that's on Binance Chain. I'm not a fan. I'm not a fan of anything that's on Binance Chain. Yeah, sorry.
Okay.
Yeah.
Okay, I think we're good.
The mic drop moment.
Yeah, there we go. All right, folks, I will, thanks for hanging out with us here today. Thanks for your questions. And again, don't forget to join us on Omdia or check us out with the free newsletter if you don't get that yet. Looking forward to talking with you guys and see you next week. Take care, everybody.
Cheers.